Good morning, everybody. This is Jamario Walker. I just want to show you a quick video on some of the things that I do in the pre-market. I get a lot of questions about my process, my trading plan, my strategy. So I just want to take a little bit of time to show you some of the things I do pre-market to get prepared for the day. I don't do a lot of scanning or picking the hottest stocks. I don't do any of that. I trade one asset, primarily AMD. I focus on it. I intimately know it more than any other asset. And I think that, fine tuning your strategy and focusing on, one or two symbols is a great way to improve your trading. As a matter of fact, the market makers on Wall Street, the hedge funds, the major banks, and such. These guys don't look for the hottest and greatest. They trade primarily one or two stocks. As an Apple market maker, Microsoft market maker, these guys are specialists at their chosen stock or industry. All right, so right now, this is the pre-market price right now. It closed at 92.63 yesterday, sitting at 92 right now. So the first thing I do every morning is I'll take a look at my stock from the previous day. And as you can see, the lowest point of yesterday was 91.08. I'd write that low point off, and I'd also take the high point of yesterday, 93.80. And then I would take the close. I write those numbers down every day. I take the lowest from the previous day, the high of the previous day, and then the close of the previous day. And I kind of use that to gauge my option, my option risk. And I'll show you that here. So once I get my figures, I write all that down. I get a basic feel for what happened in the market. I'll take a look at the 3-month chart just to get a bigger picture of what happened. And as you can see, this was yesterday's action, and this is a, kind of like an, I guess of what today's open will be. But as you can see, we've made a massive climb since, all of November. We've been climbing basically. We've been hugging this 8-period moving average, and this is very high extended. So just looking at this, I'm looking for a pullback pretty soon here. And as you can see, this top forming here, there was a top forming here, a top formed here, there's a one formed back here. These locations are very, very key points you want to look at and be mindful of. After we reach this peak, we pretty much the same configuration as it is now. Looks almost the same. Let me grab my pen right quick. Let's see here. So yeah, we have, this was a top, this formed the top, this was a top, this was a top, and this right now is looking like a top to me. So just looking at the pre-market action, I'm already thinking that, my best trade for today will probably be a short trade. This setup is eerily similar to all of these setups. Got a massive bar with an inside bar, or a bar that forms a top, and then we have a little trend reversal. Trend reverse, short reverse, reversal, small reversal. So it stands to reason that after this, fairly soon, we should have another reversal. And if we do get a reversal, we've got our, let's go ahead and get this off. We've got our 8-period moving average, the 20, and the 8-period moving average, the 13, the 8, the 13, and our 20 here. So we've got support, and then we've got our 200 a little further down here. So we've got support levels to fall from. The first one I'm looking at will probably be this 84. I doubt we get that far. We were holding above the 88 level. Get this out of the way. 87, 88 level. So I'm pretty sure we can fall to 88, 89. I'm pretty sure we can fall to that level. But let's go ahead and take a look at the options. So what I like to try to do when I get options, I like to start looking between the $5 and $6 options. In my experience, I've seen that, those options are, it's kind of like the sweet spot between not costing too much and not being too cheap, and still giving you great, opportunities for profits. So on the put side, let's look here, between $5 and $6. Put on December 4th. I always choose the closest expiration date. So I was looking at these guys here, the 97 or the 98, and seeing that we're already below yesterday's close. These puts are going to be more expensive when the market opens. Let's see here. This gauge of the last price isn't really indicative of the current price. It's the last price and the trading session from yesterday. It's not pre-market. It doesn't update in pre-market. So what I'm going to see here is right now we closed at 92.63, but we're at a 91.90 right now. That's our implied open, taking the pre-market moves into account. So I can expect these prices to probably gain about 40, maybe 50 cents. So taking that in consideration, this here probably be the best bet. This one is going to go up about 30, 40, maybe 50 cents right after the open. So we're going to take a look at this first. What we're looking at, I'm going to try to spend about 2,500 to 3,000. So let's bring our amount down. So this is about 28, almost $3,000 here. Go ahead and circle that so you can see. That's the price of this option if I buy 6 of the 97 strikes at a price of $480. Once the market opens and people are exchanging shares, this price here is going to change. That price of the option is going to change. It's going to go up and down depending on the price and the movement of the stock. But me, I want to try to stay close to that $5. If I can get these guys here for a cheaper price, I mean that's a good deal. But let's see here. So taking these 6 of the 97 strikes into account, let's take a look at our snapshot here to get a preview of our price breakdown. If I was to buy these puts, this is telling us that if the price goes below 92.20, we're at 91.88 now, so we're below that point already. But if we were to go below 92.20, and this is the amount that I would make, depending on how much lower we rent under here. As you can see, just watch right. Let me get this out of the way. If you look right here, you will see the price change. Let me do that better. This area here is going to show you how the price is going to change. Depending, the option is going to change depending on the price of your stock. So if we go down to the low of yesterday, which was 91.08, if we can make it to the low of yesterday, 91.08, this option will bring us, let's see here, almost $790. If we were to buy this option at accept price right now, and sell once it got to the close of the low of yesterday, that's almost $800 play there. But that's only if we buy it at the 480. We buy it at 490 or $5, your numbers are going to change. So if we buy this at $5, it's going to cost us $3,000, and our break even is now 92. If it's below 92 now, and now let's take into account yesterday's lowest, which is 91.08. If we were to get down to that level, now we'd get about, let's see here, $600, maybe $700. And this you can, and also if we go above the high of yesterday, 93.80, we're going to lose $600. But you won't be in that trade if that happens. We don't stay in any trade that takes us, we lose less than 10% of our position, or if it moves against us on the chart. So you won't lose that amount of money if you know how to trade. You get out of the trades that are going against you. So we don't necessarily worry about that as you know how to trade. But we buy this put if we're predicting a down move in the stock, hoping that it retreats from the highs of yesterday. Let's take a look. Let's go closer. So at the low point of yesterday, at our 91.09 level, if we were to get any of that, we get to those lows at all, the 91s, the lower 91s, that's a very profitable trade for us. So what I would do, if I like the cost of that option, I like, the risk reward ratio. If I like that, I'll save this trade, and potentially I'll watch it at the open and see if it's still a viable option for me. I'm going to go ahead and save that. So now let's take a look at a long trade. I doubt I take a long trade this morning, but I still want to gauge it just in case. So the same thing, we're going to look between $5 and $6. So since the market is already falling pre-market, that means these calls are going to get cheaper. Your puts are going to get more expensive if the market falls, and your calls are going to get cheaper as the market falls, because it's less of a chance of you reaching or bumping above your strike price by expiration. These are the strike prices here. So for a call, you want your stock to rise before this strike price. For a put, you're looking for your stock to go below the strike price. This is if you're buying. If you're selling, it's the opposite. But I only buy calls and puts. I don't really deal with any selling of calls and puts right now. So if I buy a call, if I buy a 92 call, I'm looking for the price of that stock to rise above 92. That's how I make my profit. If I buy a 92 put, I'm looking for the price to drop below 92, and that's where I make my profit. So let's look at a call now between $5 and $6. Understanding that these are going to get cheaper as the price drops. So a $500 or $600 like this one here is going to be probably in the high fives. This one is going to be fairly cheap. It may even get down to $5. So let's do 6 of these. $5.80 now. Let's do a regular $5. Let's do 6 at $5 a piece. Give us 3,000. That's what it's going to cost us, and our break even is 92, meaning any break above 92 is profitable for us. And by the amount, just to gauge it, our high of yesterday was 93.80. So if we were able to get back to 93.80 today, we get about $1,100 off this trade. Now that's a very, very good trade if we were able to get that. You can all in the open interest area here, it shows contracts of this particular option trade that are already open but not closed yet. So there's almost 4,500 people holding these contracts here, holding the 87 calls. There's almost 7,000 holding the 88, almost 8,000 holding the 92, almost 20,000 holding the 95. Now you're not able to see if these guys are long or short these contracts. It's just the total number. 11,000 here. So that's just a little bit about, my pre-market process. Like I say, I don't do any scanning. I don't really do any of that. I know what I'm going to trade. I don't know if it's going to be long or short yet though. So yeah, that is a little bit of what I do. I may do other videos going into a little bit more detail about, options trading, because options trading, it is it is harder than regular straight equity trading. You can make a lot of money. You can also lose a lot of money fairly quickly with option trading if you don't know what you're doing. So I really recommend, this is a paper account here, so this isn't real money I'm showing you. But I really recommend trading in a paper account to get the feel for the options trading, because things can move quite fast when you're trading options. So you really got to know what you're doing. You can't panic. You got to have a sound strategy. You got to stick with it. But thank you guys for watching. I hope you gained something from that. A little bit of my pre-market process. It's fairly quick. I'll get up, I'll check my chart, I'll get the highs and lows of yesterday at the close. I'll get a feel for what happened, previously. Sometimes I'll take a look at the 10-day just to get a little gauge of what's been happening in my stock. See, AMD's made a lot of big moves, big move. So it's almost due for a little pullback. It's due to come back a little bit, maybe to the 87, maybe to the 90 level. So yeah, guys, that's it. That's my pre-market process. That's a little bit of it. That's the meats and the potatoes of it. So hope you're able to gain something from that, and I will talk to you guys the next time. Thanks.